BMW's core profit margin rose in the third quarter. The German automaker beat forecasts on Wednesday with an operating margin of 5.2% for its automotive unit in the July to September period. That was up from 2.3% a year earlier. Group earnings before interest and tax met forecasts at $2.7 billion, while revenues were slightly weaker than expected. BMW's results were a bright spot in another difficult quarter for Europe's car makers, who have endured high US tariffs and cheap Chinese rivals. BMW cut its full-year guidance last month due to tariff costs and slow growth in China. The group said it still expected the margin for cars within a range of 5% to 6%, slipping from 6.3% last year. Wednesday's update comes as the auto giant passed the peak in research and development spending on a new all-electric range. It expects the first model from the Neue Klasse series to drive growth next year. Elsewhere, Japanese rival Toyota raised its full-year profit forecast Wednesday. The automaker bet solid performance outside the US would help it ride out the impact of President Donald Trump's tariffs. The world's top-selling car maker now expects operating profit of $22.6 billion for the financial year to the end of March. That's up 6% from the $20.7 billion it previously forecast. However, operating profit fell 27% to $5.4 billion in the most recent quarter, short of analyst projections. It was Toyota's second straight decline in quarterly profits. Shares in BMW were up around 4%, while Toyota fell just over 3.6%.